Hey everyone, welcome to this latest edition of Behind the Charts. The conversation you're going to hear in a moment is when we met with Matt Lampert from Elliot Wave International. Bob Prechter invited us into Elliot Wave International's headquarters outside of Atlanta, Georgia. This is mid-February, just before the eventual market top. And we got to meet with some of their strategists like Peter Kendall and Steve Hochberg. Got to meet with Bob as well as Bob's son, who works with him now. And he introduced us to Matt Lampert, who is the head of the Socionomics Institute. If you're not familiar with Bob's work on socionomics, I found, the Elliot Wave component is more of the quantitative way of analyzing market structure and the behavioral ways that social mood and psychology manifests itself in stock prices. What Matt focuses on and the Socionomics Institute is more related to social mood itself. Because a lot of people sort of think the market does X and then people are optimistic or pessimistic or positive or negative because of that market movement. And what they do is they reverse the causality. So people are nervous and that's what causes the market to go down. People are optimistic, that's what causes the market to go up. So focusing on social mood and the causal nature of it can be really, really helpful. And what's fascinating is we talked about this just before the market top. We obviously didn't know that at the time, but I asked Matt in particular, what sort of signs, guideposts was he seeing suggesting that we were entering sort of the later stages of euphoria? And I thought his answer was fantastic and incredibly prescient. Here's my conversation with Matt Lampert from Elliot Wave International. Hey everyone, we're here at Elliot Wave International outside of Atlanta, Georgia. I'm here with Matt Lampert, who's the director of the Socionomics Institute. Matt, thanks for joining me. I appreciate it.
Hey, glad to be here.
Yeah, so I was chatting with Bob Prechter a little earlier. He spoke highly of what you're doing, and if anyone has pioneered this idea of applying social mood and sociology to investing, I think of Bob, and it sounds like you've continued on in his path. What's your role like? Can you just tell us about what your role is as a director of the Socionomics Institute?
Absolutely. So, stock charts are cool, right? We all know
I do.
That. Yeah, they're cool. But we think they're even cooler than a lot of people realize, because we think stock charts are a recording of social mood, waves of optimism and pessimism that investors have been recording in data going back centuries in some countries. So it's, in a way, when you look at a stock chart going back 300 years, you're not only looking at kind of humankind's valuation of its own progress, but you're also looking at these waves of mood going on throughout the ages. And what we do at the Socionomics Institute is we use financial markets as indicators of social mood to understand all sorts of things. Because my goodness, when people are feeling good, they're feeling positive, they're feeling optimistic, yeah, they bid up stock prices and that's cool, but they do a lot of other things. They tend to make peace rather than war. They tend to prefer happier, more upbeat music. They tend to embrace friskier fashion trends, for example. But when that psychology changes, so does the behavior. And so when mood's becoming more negative, people are becoming more fearful, more pessimistic, they send stock prices lower, but they also tend to make war more often than they make love. And they prefer slower tempo music, more pessimistic themes.
Right.
Fashion tends to get darker. And so once you start looking at the world through this lens, you can begin to forecast all kinds of social trends just with the chart of the market. So that's what we do.
It's so interesting that you made a little comment in there with some might have missed, which I thought was wonderful, which was talking a little bit about the causality. You sort of said people get depressed, they get negative, they bid stocks lower. And a lot of people kind of mentally reverse that. They think stocks are down, so people are depressed, so they do things. You kind of alluded to the opposite effect, right? That people get upset or they get depressed, and that's what causes stock prices to go. Can you talk a little bit about that causality?
Yeah. This is so important. And this is really the key to the socionomic insight. This was Bob Prechter's big breakthrough, because what you're describing is really the conventional view, this idea that events and social actions and these sorts of things, news, impacts social mood. They impact our levels of optimism and pessimism.
Right.
And what we do is we turn that causality on its head. We start with the psychology, because those events and those behaviors, those pieces of news, they have to come from somewhere. And they come from people who have feelings. So if you know how people are feeling, then you've got a leg up on anticipating what they're going to do.
Right. It's interesting. What I love how you're describing things is from when I first met Bob and when I've kept in touch with him. I love the focus on human psychology and the behavior that drives asset prices. I think so many people, especially in recent years, right, have become very focused on quantitative analytics, statistical analysis, kind of mathematizing, if that's probably not a word, but
totally
quantifying, right? I mean, mathematizing the world, thinking of it as a mathematical problem, and talking with Bob and how you described it is more. It's about humans behaving like humans, and that's what you're quantifying, right?
Yeah, when you look at StockCharts, you're really looking at trends in social psychology.
Yeah.
And so if you start with the psychology, then you end up having, we found, a lot better luck anticipating the behavior than trying to do it the other way around.
That's right.
And we think that there's room, certainly, for market analysis, but we find really it's better to be qualitative than quantitative. When you look at Elliot waveforms, what you're looking at are these qualitative patterns with a lot of quantitative variability.
Sure.
And so when you do quantitative market analysis, you're trying to find quantitative similarities or consistencies that you can bank on over time.
Right.
And what we've found is that you're far better off looking for qualitative similarities, looking for these repetitive Elliot waveforms over time.
So when you talk about euphoria, when you talk about optimism, we're at this situation early 2020, where by any measure I've seen, things certainly feel euphoric, right? I mean, in terms of stock market at all-time highs, pulling back a little bit, but still incredibly elevated relative to historical trends. The trend has been positive for a number of years. How do you, from a socionomics professor, how do you measure that euphoria, right? I mean, at some point, it feels like that's it. That's as bullish, as optimistic as people can get. How do you quantify that? How do you measure levels of euphoria, and where are we at relative to those extremes, do you think?
Yeah, well, we find that the Elliott wave model itself is a really handy tool for doing that.
Okay.
Because if you just use, say, a sentiment indicator, sentiment indicators can be elevated for quite a long time.
Sure.
And so you can say, oh, this is an extreme reading. Maybe we've never seen something like this before. But then it's kind of like, remember those old Energizer commercials with the bunny that just kept going and going and going and going? Sometimes sentiment can be like that too. Yeah. But with the Elliott wave model, you've at least got a method that allows you to anticipate, okay, is there another leg left in the trend? Do we have another wave to go? Or have we seen a completed Elliott wave pattern? And one of the wonderful things about my job, Dave, is I am totally off the hook when it comes to market analysis. I leave that to Bob and Steve Hochberg and Pete Kendall. And what we do in Socionomics is we take that market analysis and we say, okay, if that's where the market's headed, then what other social trends are likely to follow on the back of that same wave of social psychology?
So when we were talking with Peter Kendall, you mentioned a little earlier, he was telling us about, very market oriented, but thinking about culture and how that relates to it. What can you tell us at all at this point? What are you seeing from, non-financial inputs that might provide some color in terms of the overall environment? Are you seeing trends that suggest something about where we're at as a society in terms of social mood right now? Any guideposts to keep in mind?
Sure, I think the pop culture space is really interesting in this regard. Let's look at movies, for example.
Okay.
In 2019, Disney had a record-breaking year. It was one of the, in fact, it was the biggest year in box office history for a particular studio for Disney, setting all kinds of records. And one of the things that Bob's done is he's looked at the history of Disney and found that when Disney is having a boom time, you're almost certainly in a bull market, and they tend to do the best, as that trend matures and develops. And so when we start seeing all this enthusiasm for Disney, they seem like they're taking over the world, pretty much in the cinemascape anyway.
Yeah.
That's a signal to us. Okay, this trend is quite mature. You think about the kind of the Disney golden age in the 1950s and 60s in that bull market, or the Disney Renaissance in the 1990s bull market, and now we're seeing Disney coming to the fore in a huge way. But there's a flip side to that. There's another side to that coin, and that is one of the things that we've seen in the past couple of years in particular is a resurgence in horror movies. We've had not only popular horror films, but highly regarded in terms of their critical appraisals. Some of the work that Jordan Peele's done, for example, has been nominated for Academy Awards and this sort of thing. And so when we start seeing this resurgence of horror, you're starting to see that negative mood begin to creep in.
Right.
And the flip side to Disney doing well in bull markets is that horror tends to do well in bear markets.
Interesting.
And so when you start seeing that trend starting to turn a little bit, or you start to see horror coming back to the fore, it's a signal that, okay, this is a really interesting juncture in the mood trend. And we saw something very similar in the late 90s. You had Disney doing really well, but you also had movies like The Sixth Sense and The Blair Witch Project coming out in the late 90s. Sixth Sense nominated for Best Picture, Blair Witch Project, one of the most profitable films in history.
Yeah.
And so we've kind of been there before in the movie space. Yeah. We're also seeing some similar trends in music. So last year, Taylor Swift set the record for the most simultaneous hits on the Billboard chart among a female performer in history. And Taylor Swift is this kind of upbeat, positive mood icon.
Very true.
But she broke a record. She set the record. The record was set just months before, earlier in the year, by another female performer named Billie Eilish, who makes exactly the opposite kind of music. This more super pessimistic, downbeat, down-tempo sorts of stuff. And so we're seeing this juxtaposition in movies, we're seeing it in music. We also saw juxtaposition in music in the late 90s as well. You had the Backstreet Boys and NSYNC doing really well, but you also had Limp Bizkit and Rage Against the Machine and other bands on the harder edge side that were having hits right at the same time. So we think this indicates that we're at a really interesting place in the social media.
Wow, it really is sort of a juxtaposition of the two extremes, isn't it?
Yeah.
I'd love to ask, so, I've read some of Bob's, papers. I've heard him speak to Socionomics and just talking about it. What's next? Like, what are you guys focused on now? I mean, what you're saying makes a ton of sense. I love that thinking about social mood as an indicator of society. Where are you guys focused now? What's next for Socionomics, do you know?
Yeah, for the field, we're really excited about going deeper on the application side.
Okay.
One of my passions is applying socionomics to business decision making.
Got it.
And especially if we think we're seeing kind of a frothy time in the markets, if you want to be prepared for the wave that comes after that, that's a really smart thing to do as a business decision maker, because your competitors are probably not preparing for the wave down.
Got it.
Because what happens as humans is a very natural thing. We extrapolate trends. And so when people are positive and optimistic, you don't want to be the Debbie Downer saying, oh, but bad things happen every now and again. We need to be ready. And even if you try to do that, other people aren't going to hear you. It's not going to resonate in that euphoric, positive environment.
Yeah.
So at an organizational level, if you're in a huge corporation, it's difficult to prepare for the downside. But as an individual, you can prepare. And as an individual business owner or a small business owner, you can start looking around the corner. So trying to think of bear market business opportunities, ways that people can survive and thrive, even if we were to come come through some difficult times, is something that I'm interested in helping people think through now.
Very interesting. So for people that are not familiar with what we've talked about with Socionomics, where would you point them to? How can they learn more about this field?
Yeah, the best place to go is the website, socionomics.net, all kinds of stuff on there, articles, papers, reports you can read, videos too.
Perfect.
Yes.
Matt, this was great. Thanks so much. I appreciate it.
Thank you.
Folks, this is Matt Lampert, the director of the Socionomics Institute. I'm Dave Keller with StockCharts.com.
Hey guys, Grayson Rose here with StockCharts.com. Thank you so much for watching. I hope you enjoyed this video. Remember, if you did, give us a like down below, leave us a comment. We'd love to hear from you. And most importantly, don't forget to subscribe to our YouTube channel for daily content from an incredible collection of technical analysts and financial minds. We'll see you back here very soon. Happy charting, my friends.